Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Let's take a look on the forex markets. In the first video today, we now looking at the euro currency. So currently, as you know, we're tracking the two currencies in at once. So this is euro and Great British pound because they're also very similar stuff. So currently, actually, there's no big difference what particular currency to talk about, since the overall price action looks very similar. The markets, as the cable, is the euro currency is completed some preliminary reaction on resistance, preliminary reaction on the targets that have been achieved recently, and now market needs some new driving factor, some new push that could set the direction. And as we expect, this should become the non-farm payrolls today. Yesterday was significant action you could see on the stock market as it has collapsed, so it's at least compared to the previous sessions within a few weeks. This is first more or less significant sell-off on the stock market, not only in the United States, but in Europe as well. And also the Bitcoin has dropped very significantly, so somewhere to the 10 even area. Yesterday in our analysis we talked about 1050, 1060, but 1020 area is, well, it's a bit, not of course too much, but it provides some new direction for the market, and the overall price action could be a bit different compared to the very bullish scenario that we discussed previously. So, but this is a different topic. So what we have on the euro? On the euro we have technically two major driving factors. So first it stands on the monthly. As you know, monthly chart, euro has hit the major COP target. Here on daily, another important pattern that we have is a grabber, of course. It's a more powerful pattern because it stands on the higher time frame, I mean daily, compared to what we have on the intraday chart. And this pattern itself suggests taking out of these lows. Somehow this should happen. Maybe if it will be not friendly, non-farm payrolls release to the downward action, it could be some volatility spike maybe, or some action. But, well, this pattern at least suggests the taking out of these lows. That's what we have on the daily chart. If, as we said yesterday as well, we already discussed this, if really this will be breakout to the downside, then the nearest destination point that we could achieve, maybe even today, it's around 1640, 1650 area as a fib level, and take a look, daily result. So it will be really strong data today, and dollar starts to rise, euro will collapse. In this case, that's most probable destination point in the short term. Well, on the 4-hour time frame chart, we have reaction on the support line. So we have on the daily chart this lower border of the long term, let's call it a flag or something of that sort. So traders who are selling here now protect the profit, booking the profit before non-farm payrolls release, and that leads to some pullback. Here we have some hint. It looks bullish, so we have some bullish divergence, but this pattern, guys, doesn't deserve total relation on it. So it's too few to make the trade, because we have some more valuable patterns and signals on the high time frame. This divergence looks nice, but personally, well, I'm not really fascinating with putting the bet on this stop, because divergence itself suggests the action above the stop, and in the current situation I do not see any other signs that point on the same thing. Currently I see just a moderate slow upward action that carries the features of the pullback, features of the retracement mostly, and that doesn't correspond to the idea of the possible rally. So maybe later we'll change something, but yes, we have some bullish sign, but it's too small to plan some trades based on this. Besides, if you'll take a look at the hourly chart, here we have the shape of the hand and shoulders pattern with the absolutely classical price behavior. So take a look. First slope of the head in favor of the bears, because we have this straight downward action really fast. Upward action is also very gradual and slow. That has how it should be. Now we have retracement right back down. Here's a few grabbers, of course, have been formed. Maybe, I don't know, maybe here we will see some volatility, maybe some spikes, because this here is, we have, let's take a look, maybe this is not the grabber. Where's the close of this candle was? That was 1847. No, we don't have any grabbers. So, all the better. So anyway, with this head and shoulders pattern, as you can see, it's forming. The market should reach somewhere back to the area that's harmonical and symmetrical to the bottom of the left arm. It's approximately 1826. This is 50% support that will favor that the euro likes to use this action. And then, if we suggest that it will be some kind of the AB equals CD pattern, that could be somewhere into the 19 even, where the market could reach. Potentially. But since it's just pullback, you could also keep an eye on this resistance around 1873. Because here, guys, we have a kind of the bread and butter setup. And take a look. It's 1, 2, 3, 4, 5, 6, 7, 8 bars to the downside. If we plot here the moving average, Napoli, you could see we have 1, 2. Yes, it's a bit more closing above the 3 by 3, so it will be some kind of the look-alike pattern, but overall feature is the same as in bread and butter. Significant sell-off, pull back to the first level, that could lead to some minor downward retracement, just to complete the bread and butter, or, well, this could be downside continuation if at this moment the non-farm payrolls will be released. And using this bread and butter, you could plan, for example, taking the short position if you would like to do this. So, that being said, currently, guys, at this moment, no very significant stops we have. Market definitely waits for numbers. Hardly some significant volatility we will get before numbers will be released. Depending on your view, you could consider different stops that we have. For example, if you would like to go short and do not have position yet, you could consider the bread and butter trade, but with the stop, initial stop, it would be better placed above this area, because we do not know how market will behave for this head and shoulders. If you would like to make the scalp long trade, hoping that this will be completed before non-farm payrolls will be completed, consider this head and shoulders. On bears also, you could consider this head and shoulders. Why? Because if market starts to fail here, for example, it starts to form the shoulder, but gradually starts dropping lower, that will be the signal that head and shoulders is failing, and that will be the opportunity to go short, because here we could get acceleration. It usually happens when the pattern is failing. So as you can see, some setups exist that you could monitor and make the decision depending on your direction if you would like to trade it. So basically, it's just two major stops: the head and shoulders here on the hourly chart, and on the follow time frame chart, potential bread and butter that could let you to take the additional short position, downward action. Minimal target, as I said, based on the grabber that we have on the daily, its market should take it out of these lows, but potentially, if numbers indeed will be good, we could see market somewhere in this area.